Hi there, you're watching Market Cafe on ET Now with me, Shreyansi Singh and Priyanka Uppal. And over the next 1 hour, we'll take you through news and updates from within the country as well as across the globe, tell you which stocks you should be keeping on your radar and as well, and tell you which brokerages are saying what about which counters as well. But first things first, Priyanka, let's take a look at the Wall Street and how that handover is coming in.
Absolutely. Morning, Shreyansi. In fact, the way US markets clawed back, notched back to the record session. We've seen the earnings is majorly a upbeat earning. That's the big reason trigger coming in from US. Now, Dow, that has clawed back to its record high again, gained nearly 1%. In fact, S&P also added 0.5%, but then, of course, the main cues triggers coming in from the banking stocks and the earnings there. Nasdaq also gained 0.25% yesterday. Major upbeat was the earning. 50 companies total from the S&P structure. They have posted good set of numbers, and that's what the traders and the market participants are reacting to. Morgan Stanley, if you talk about, that rose to 6.5% after an upbeat number, higher profits, and now that is taking the sentiment higher for US market. Let's see how Indian markets also pan out, because we are also posting good set of numbers, at least yesterday, the kind of numbers which came in from IT Pack as well as the Axis Bank. Now, there were few of the key economic data which has come in from US. Retail sales, that has risen in the month of September to 0.4%. Now, this is better than expectation. This also helped lift the sentiment for US participants. And this is a clear indication that it's a resilient economy. Though there is a slowdown in the economy, which analysts are expecting, but the recent data, the economic data is coming, that is supported. Though their jobless claim data, there was a dip in that. But then let's see how we react to this, all these news. At least the consumer spending, that has held in September. Earnings are coming upbeat, and some sort of disappointment coming in from at least the initial unemployment claim that has filed a seasonally adjusted 241,000. That's a decline of 19,000 nearly. But the numbers that are coming, especially numbers which has been posted by Morgan Stanley, even United Airlines, those numbers are quite strong. That's what we saw, that how we are going to pan out today. But then some sort of not a very good news which is coming from crude, at least.
Well, absolutely. When you take a look at crude, what you're seeing is a reversal of the trend that we've seen a little bit, because when you take a look at crude oil futures, they edged higher after 4 days of losses on easing fears of a supply disruption in the Middle East as well as a looming surplus next year. So when you take a look at WTI, you're looking at gains coming in of just about 28 cents or 0.4%, and $70 per barrel is where that one was at. Year to date, of course, that contract has also fallen more than 1%. That's the kind of move that we've seen come in, at least for US WTI. When you take a look at Brent as well, you're looking at $74 per barrel levels, uptick of just about 23 cents or 0.3% coming in for that one as well. And year to date, that benchmark has also declined more than 3%. Now, of course, Israel has reportedly told the US that it will be refraining from hitting Iran's oil facilities in retaliation for the Islamic Republic's October 1st ballistic missile attack. And the oil market, of course, sold off steeply on Tuesday. Earlier this week, reports were suggesting that Israel will be limiting its strike to military targets in Iran, and that is something that the market really took note of, especially on Tuesday. But switching focus to gold then, because gold prices also hit record highs as uncertainty surrounding the US presidential elections as well as the war in the Middle East is something that prompted investors to seek out the safe haven assets. So we've seen some safe haven buying come in for the precious metal, while easing monetary policy environment is also something that also kept prices elevated. So when you take a look at the price levels for spot gold, you're looking at 2,690 thereabout dollars per ounce, and US gold futures, of course, settled up close to those record high levels is where gold was at, Priyanka.
Absolutely. And now let's just understand what are the key global cues that one needs to eye on. And of course, to add to more on the data that is coming from the macro front, the ECB, that has cut the interest rate. That's the third cut in this year. Now the interest rate stands at 3.25%. Now, UK, there's a retail sales data has to come from UK. Talking about China, a lot of economic data has to come in from Asian markets. At least from China, the GDP retail sales data, let's see how this comes out, because this is also going to give us an indication how much resilient their economy is, whereas there are indications of slowdown there. Industrial production data has to come in from China, and even their home prices what has to come in. Another set of data that's on the inflation front that will come from Japanese markets, CPI data, which will very closely the markets would like to eye on because the kind of movement Japan, Nikkei, and especially the yen trade carry that affects not just their economy, even the global trades. And back home on earnings front, we have a key earning coming in, nifty earning, that's Tata Consumer. Let's see how this pans out because at least especially the kind of earnings we've seen from Nestle, it was little miss on the expectation. So how FMCG packs turns out, but clear sign, at least good set of sign coming in from the IT pack and of course the Axis Bank numbers. So these are the top cues one need to watch out for.
Well, absolutely. And let's take a closer look then at what the ECB then did, because the European Central Bank lowered its key lending rate from 3.5% to 3.25%, reflecting optimism as inflation dropped to a 3-year low of 1.8% below its 2% target. Now, this is, remember, the third cut since June suggests that further rate reductions are on the cards as economic growth slows. Now, the Eurozone growth of a mild 0.3% in the second quarter has only reinforced the belief that ECB President Christine Lagarde will not attempt to change this expectation. So that's the latest update as far as the ECB is concerned.
All right, so the rate stands at 3.25%, third cut coming in this year. Meanwhile, the Japanese CPI, that grew more than expected in September month as underlying inflation remains sticky, although the headline figure still fell from 10 months high. Now, the core CPI, which excludes volatile fresh food items, that grew 2.4% Y-on-Y in the month of September. The reading was higher than expectations of 2.3%, but this one eased from the 2.8% mark that was on a 10-month high, which was seen in the prior month. Now, headline CPI inflation fell to 2.5% from 3% in the prior month.
Alright, then meanwhile, the head of the International Monetary Fund cautioned that high debt and low growth remain major impediments to the global economy. In fact, in an interview to a channel, MD Kristalina Georgieva said that while notable progress had been made in the global economic recovery, governments had become too accustomed to borrowing with anemic growth, adding to the challenges of servicing that debt. In fact, she also added that it's not yet time to celebrate. Additionally, she alluded to persistent inflation risks in select pockets of the world as well.
Okay, and moving on, keeping it with macros only, the kind of retails in the United States that that rose more than expected. Now, this supports the view that the economy maintained a strong pace of growth in the third quarter. Retail sales rose 0.4% last month after an unrevised 0.1% gain in the month of August. Now, signs of macro resilience that likely will not discourage the Fed from cutting interest rates again next month, but will cement expectations for a smaller 25 bps cut at least in the borrowing costs.
Time now to take stock of earnings, then shifting focus to earnings. Netflix third quarter subscribers barely beat estimates as ad-tier members jumped 35%. The company delivered a beat on both their top and bottom lines. Meanwhile, the company is projecting revenue for the full year of 2025 to be between $43 billion to $44 billion as it improves its core series and films offerings. Shares of the streaming giant also soared 5% in after-hours trade.
Okay, so keeping it with the earnings only, now world's largest producer of advanced chips, Taiwan Semiconductor Manufacturing Company, or as we know it as TSMC, that reported a 54% hike in profits, and that to be the third quarter amid robust AI demand. Shares of chip companies rose on the results. Net revenue came in at $23.5 billion in the third quarter. This is 36% of jump on year-on-year basis. Now, shares of Nvidia, Micron, and even AMD, they were all up almost 1% at the close. These are the same set of stocks which actually were trading with the pressure at the start of this week.
And now time for some geopolitical updates from conflict-hit Gaza, where Israel forces are now claiming to have killed Hamas leader Yahya Sinwar in the Gaza Strip. There has been no comment from Hamas on Sinwar, who succeeded Hamas's Ismail Haniyeh after his assassination by Israel in July. The Israeli ground offensive, meanwhile, continues to claim innocent civilian lives. At least 10 Palestinians were killed in an Israeli strike on the Maghazi refugee camp in central Gaza, following the killing of at least 28 people, including children, in an Israeli attack on a UN shelter in northern Gaza's Jabalia.
right, amid all the economic data which has to come from the Asian market, we stay for a short break here. We'll get you more cues from the Asian market, not just Nikkei, but even we tell you how Hang Seng is doing right now. Stay for a break. Welcome back. You're watching Market Cafe on ET now. This is Priyanka Uppal. Now, mixed set of cues coming in from Asian markets. This is on the back of investors awaiting key economic data from China, and of course is assessing the Japan's inflation numbers also. Now, Japan's Nikkei, that has opened nearly 0.5% up, 0.3%. That's what it's trading at the moment. While the broad-based topics, that rose 0.34%. South Korea's blue chip Kospi, that was almost flat, while small cap Kostak, yes, that's nearly 0.25% down. Kostak is slipped by similar 0.25% also. Now, assessing what kind of expectation one should have from the economic data that has to come from China and Hang Seng. Hang Seng shows strength. It's up more than 0.5%, whereas Shanghai has opened flat to positive now. Now, the China's third quarter GDP, that's on the tap, and that's expected to come in at 4.5%. This is as per the estimates. Now, comparison was we're comparing it with the 4.7% growth which came in the prior quarter. For September month, economics are expecting a mixed picture. If you talk about the other data for the Chinese economy, urban investment is estimated to grow. Retail sales could also rise 2.5% on year-on-year basis. This is a faster growth than last month's 2.1%. Even the industrial production, that is expected to expand to 4.5%, and this is also a Y-on-Y figure. And of course, Japan's headline inflation that hasn't come in from the month of September, that has come at 2.5%, while the core CPI, which excludes the fresh food prices, that has risen 2.4% Y-on-Y basis. And let's even look at the Nifty implied volatility, implied open, that is showing us a cut of nearly 100 points. But let's see, as we progress, as the day advances, maybe we are in for a rebound trade. Of course, this is purely on the kind of numbers that Street posted, that the IT pack and Axis Bank posted post the markets yesterday. Let's see.
Well, absolutely. Let's see how that really pans out. Welcome back. Thank you so much for staying tuned in. Well, let's get you some cues coming in from that mega IPO that we've been tracking. And of course, I'm talking about Hyundai Motor India IPO that has managed to successfully sail through the IPO which was aided by brisk buying by qualified institutional buyers. At the end of the day 3, the IPO was subscribed 2.37 times despite muted response from retail investors. In fact, the IPO saw the lowest retail subscription, like you can see on your screens, among recent large IPOs. Let's also go across to Anurag Joshi, who's standing by with more details. Anurag?
Hyundai Motor India's IPO, India's biggest ever, has been oversubscribed 2.37 times. Hyundai Motor India will sell shares offered via the equity sale at the top end of the band at 1,960 rupees. Hyundai Motor India IPO plans to raise 27,870 crore rupees, which is about $3.3 billion. The equity sale is India's biggest ever and surpassed the Life Insurance Corporation's IPO, which until now was the largest. In terms of the numbers, if we see the QIB subscriptions were about 7 times, NII at 0.6 times and retail at 0.5 times. The parent Hyundai Motor Company will sell 14.2 crore shares to investors via the IPO. Hyundai Motor Company set up operations in India in 1996 and is the second biggest car auto manufacturer in the country after Maruti Suzuki.
Technically, QIBs have come to rescue. Otherwise, there was a lukewarm response from the retail investors for Hyundai IPO. Thanks, Anurag, for all that details. Moving on, SEBI recently announced new rules for securities payout in a bid to make the Indian stock market more transparent and efficient also. My colleague Anurag Shah caught up with the HDFC Securities Dheeraj Relly about how these rules may impact its broking business. He also spoke about the new asset class in the works by SEBI. Take a look.
Brokers have been doing well, and overall if you see how the number of demat accounts have been growing and the volume have been growing, all capital market participants have been having a very good time in last few years. So to that extent, with the decrease in the volume, there'll be a negative impact, but we are at a very low kind of a charges ecosystem. There is a scope for increasing the charges. I think that will be good enough for people, for the impacted brokers to take care of their profitability and their revenue.
Sir, just want to understand about the new asset class also. So what is the latest update from your side on that new asset class, and how a game changer this new asset class would be, which is between the mutual fund and PMS?
I think the minimum investment required for a PMS is 50 lakhs. So that's where, there was a need for a mass affluent and some of the investors who have a higher appetite to invest, yet they want a more concentrated kind of a portfolio, more thematic portfolio. So that's where this new asset class will give a lot of leeway to the AMCs to come out with the differentiated offering for some of these investors who can invest between 10 lakh to 50 lakh kind of an amount and can take a differentiated bets and risks. So I think it will expand the market big time.
Alright, then that was a slice of that conversation. Moving on, then the RBI has taken action against 4 NBFCs and has directed them to stop loan sanctioning as well as disbursal effective from 21st of October. To give us more details on which NBFCs will be affected, we do have Anurag Shah standing by. Anurag, quite a busy day for you. Tell us a little more about this as well.
Reserve Bank of India has taken action against 4 NBFCs and barred these 4 NBFCs from sanctioning of loans effective from 21st of October, sanctioning and disbursal of loans. These 4 NBFCs are Chennai-based Ashirwad Microfinance, Kolkata-based Around Financial Services, Delhi-based DMI Finance, and Bengaluru-based Navi Finserv. So, action taken due to the excessive pricing policy, particularly in weighted average lending rate. These NBFCs has also violated the NBFC's fair practice code, and the recovery practices also violated by these NBFCs, and non-compliance with the guidelines of monthly repayment obligation was also one of a reason of the RBI's action. Irregularities in gold loan portfolio management was also the reason mentioned in RBI's release. Outsourcing of core financial services were also flagged by the RBI. Although for the present, these NBFCs can continue servicing the existing customers and conducting the collection process for the ongoing customers. So the action by RBI is an effort for the to ensure the stability and compliance in the financial sector. So these action taken on the 4 NBFCs, and it will be effective from 21st of October.
Major base is the non-adherence. Thanks very much, Anurag, for sharing all the details on this matter. Now, the 4 companies that the RBI has taken action against include Ashirwad Microfinance, Arohan Financial, DMI Finance, and even Sachin Bansal-backed Navi. Now, Ashirwad Micro is a subsidiary of Mannapuram Finance, which is a listed company. So, what do this means for the only listed stock that has come under the scanner? Now, Varun joins in with more details to explain us. Varun, of course, RBI is very clearly taking very stern action against many companies in terms of distributing secured, unsecured loan. Now, this is another step forward. How Mannapuram is going to react today?
Definitely, it will be a big blow for Mannapuram because Ashirwad is a subsidiary of Mannapuram, and Mannapuram holds around 97.6% holding in Ashirwad Microfinance. Now, this company, Ashirwad Microfinance, was one of the fastest growing microfinance company. If you look at the 5-year AUM CAGR, it was around 27%. And also, the customer base has grown around a CAGR in the last 5 years of 15%. This was also a high margin business because the net interest margin to AUM, if you look at that, that was around 15%. And also in the overall consolidated numbers for Mannapuram, Ashirwad used to contribute around 21% to the net profit and 30% to the overall AUM of Mannapuram Finance. So for Mannapuram Finance, Ashirwad is actually a very important business. If you look at the SOTP valuation, it used to contribute around 25 to 30%. Now, because of this, many brokerage houses have actually downgraded Mannapuram Finance. like Jeffries has downgraded to hold from buy. They have cut the price target from 270 to 167. Morgan Stanley has downgraded from overweight to equal weight, cut the price target from 262 to 170. BofA has cut the price target from 250 to 220, and also JP Morgan has downgraded the stock. And the main reason for downgrading the stock is basically, if you look going ahead, the overall loans and disbursements would come under pressure, and also the overall funding cost would go up for Manappuram Finance if they have to go ahead and fund Ashirvad Microfinance. So this is going to be a big blow for Manappuram Finance because Ashirvad is a subsidiary of Manappuram Finance.
Alright, so that entire pack is going to be in focus, including Manappuram Finance. Moving on, then Axis Bank is the one that has delivered over 50% growth in profits. Gaurav is standing by with the earnings fine print. Gaurav?
Well, yes. When we look at the numbers for Axis Bank, they were actually in line with what the street was expecting. So we saw a muted performance in net interest income, but when it comes to PPOP and PAT, there we saw a little bit of beat. But when it comes to profitability, the beat was largely led by one of provisions that they actually got written back in terms of taxes, and that is the reason why we saw a beat in PAT. If we exclude that number, we saw the PAT number was also in line with what the street was expecting. Other than that, we saw a muted performance once again in terms of advances and growths. And why I said muted is that it was actually in line with street's expectation, almost 2% growth. But when it comes to bank's commentary, bank had already said that they will be delivering performance in medium term over and above the market expectation, which was missing in this quarter as well. Other than that, asset quality was something which was in focus because bank has actually improved their asset quality. The credit cost has gone down because the recoveries were high, and at the same time bank made contingent provisions also of around 500 crore rupees. So overall the result was in line, and after that we saw a little bit of, when it comes to commentary, there also we saw from bank, they said that there will be some pressure in near term when it comes to deposit growth, which will put some pressure in advances growth as well. When we talk about brokerages now, they have kept their stance largely unchanged. We have seen some brokerages even changing their stance. They are being a little pessimistic about the bank now, because when we look at Investec, they have cut the target price to 1298 rupees, because what they say is that one-off is something that drove ROA in this quarter, and growth revival will be gradual. Apart from that, Bernstein is also saying that there is a little to cheer about, but low growth was something that was visible in this quarter as well. When we talk about Macquarie, they have unchanged, they have not changed their rating, but what they are also saying is that growth could have been better for the bank. Apart from that, we also saw IIFL actually cutting down the estimates almost by 1 to 9% in their EPS, and reiterated their target price to around 1360 rupees. So definitely there was a little bit of beat, but that was led by one-off in Axis Bank. Overall the results were in line. Definitely watching how market sees these numbers and how they react on Axis Bank numbers.
All right, so little to cheer about. This is what the brokerages are also saying, in line the set of numbers. Thanks very much, Gaurav. Let's see. This was the first major banking which has reported the numbers for this quarter so far. But then let's move on, keeping it with the earnings only. IT earnings is in focus as we have two heavyweights, Infosys as well as Wipro, which have reported their quarterly results post-market yesterday. Now, starting with Infosys, the company reported disappointing set of numbers for the second quarter. It was a miss on profit and even on margin front, while revenue managed to meet the street's expectation. Now, the company has revised its FY25 revenue outlook growth 3.75% to 4.5% and has maintained the operating margin guidance also. Let's get you the view from Salil Parekh, who's a CEO and MD Infosys also.
The financial services segment in the US continues to see discretionary spend increase in capital markets, in mortgages, cards and payments. We've seen slowness in the automotive sector in Europe. Apart from these verticals, demand trends remain stable, with clients continuing to prioritize cost takeouts over discretionary initiatives. With a strong performance in Q2 and our current outlook, we have revised our revenue growth guidance for financial year 25. The new guidance is 3.75% to 4.5% growth in constant currency for the full year. Our operating margin guidance remains the same at 20% to 22%.
All right, and that was the word coming in from the management of Infosys. In contrast, you did have Wipro posting profit and margin higher than what analysts were penciling in for the second quarter. Meanwhile, when you take a look at the revenue, that came in line with estimates. However, the tech major has lowered its third quarter guidance to -2 to 0% from -2 to 1%, which it forecasted earlier as well. Now Wipro, of course, has also announced 1:1 bonus share issue as well, and that's the update as far as Wipro is concerned. In fact, let's go across and listen to what the management then had to say.
We saw sequential growth in 3 of the 4 markets in Q2. Americas 1 achieved a sequential growth of 1.2%, driven by good performance in healthcare, technology and communication sectors. Americas 2 also recorded sequential growth of 0.8%, supported by robust demand and strong execution in BFSI sector. Europe registered a sequential decline of 0.1% due to overall weak demand and some client-specific issues in few accounts. With a strong account mining and traction in Capco business, BFSI continued to accelerate, delivering 2.7% sequential growth. This growth was led by Americas. And additionally, we are seeing momentum in both APMEA and Europe. This clearly marks the 3rd consecutive quarter of growth in BFSI. Despite softness in revenue in Q3, we are confident of maintaining our margin in a narrow band.
All right, so the 3rd consecutive quarter in terms of growth from BFSI segment. That's what the management highlighted, one of the key highlights. But then let's hear how the growth in BFSI segment looking in for the IT sector in terms of what market experts have to say. Sandeep Agrawal, fund manager for Sovelo Investments, we spoke to him earlier and he discussed the growth in IT majors, BFSI vertical, and he touched upon how this growth could aid in boosting the IT sector. Listen in.
BFSI recovery is a very, very good sign because, a lot of revenue are still dependent, 34% of Indian tech revenue come from that sector. So while people may be pulling out some negatives in each result like TCS, there was a shade of negative in North America not doing well, and also most of the beat coming in from India, which is not seen positive, but at the same time, BFSI has done well for them. Similarly, in case of Infosys, BFSI has done well while retail has been slightly weak. So I think we should be very we should feel good that BFSI is recovering, and BFSI recovery can have it has the ability to pull up the whole sector in terms of growth. But how much it can pull up and how much of it is discounted in the stock, that is something which we need to be very cautious about it.
Alright, and that's the word coming in from the expert about that one. But moving on, let's take a very quick break. When we come back, we'll take a look at some more stock-specific news. Welcome back. Thank you so much for staying tuned in. Well, let's get you some more news and updates. And Ansh is standing by with the futures and options roundup. Ansh?
Right, so FII continues to be bearish in market. If you see the index future figure, they have covered their long by around 5,900 contract. They have covered some short as well by 4,000 contract, but net to net, they are still in negative. They are down by around 1,700 contract in the previous session, due to which the total long position is at 33%, which is a 90 session low, indicating their very strong stance in the market on downside. Now, if we talk about Nifty, we saw very heavy selling in the previous session, but despite of that selling, if you see the chart, Nifty has been hovering just above its September and October lows, which is around that 24,700, 750 mark. So we can expect some good support around this level. Till we don't give a decisive breakout on from this level on downside, we can have some hopes in the market. Now, if we talk about option trend, then we are seeing very strong call writing happening at that 25,000 psychological mark, indicating option traders are expecting Nifty to take resistance around this level. Also, the PCR is around 0.5, indicating there's very strong call writing happening at the higher strike price. Now, if we talk about stocks in focus, then we are seeing significant short build-up happening in Bajaj Auto, Deepak Nitrite and Nestle. So keep an eye on the stocks.
Those earnings stocks where the earnings have disappointed the street. There you've seen the measure of the short, but nothing changes in terms of the FIs short position, short view on Indian indices. Thank you very much, Anj, for bringing those highlights from the FNO. But then let's get you the stocks that could be buzzing in trade today on the basis of earnings as well as of news flow. Of course, first trigger will come in from the earnings only. Now, the key earnings which came in, one of them is Polycab. The top line was beat, but then the margins were on a declining side. If you look at the base will be the last year, Y&Y basis, revenue has come in now with a 30% of jump, but the net profit was merely 33.6% up only. EBITDA margin has come in lower than what was expected out of it. It has come in at 11.5% versus the figure earlier was last year was 14.4%. So nearly 300 BPS, 295 BPS precisely. So this one could take a hit today. Whereas CEAT also, if you see, PAT is a miss, EBITDA is in line, revenue is also in line, but the EBITDA margin which has come in, this is nearly down 400 BPS, 0.398 BPS precisely. 14.9% was EBITDA margin last year. Now it has come in at 11%. Third stock, Tata Chemicals. This one, of course, this is a quarter-on-quarter basis results, and on quarter-on-quarter basis, the revenue are up by 5%. PAT is up by nearly 40% on quarter basis, and EBITDA margin is up by 30 BPS points. In fact, with the kind of volatility these stocks undergo because of the soda ash prices, that management is very confident, and they've voiced it out, that has bottomed out, and this can improve going ahead with the stable set of demand. So this commentary can actually also help Tata Chemicals. Now, other set of stocks where there's a news flow, Zomato could be in for a good trade, a positive sentiment can come in, can lift the stock up, because there's a board meet which is slated on October 22nd, and this is majorly to consider raising of funds via QIP. Now, this helps open up their FDI and FPI route also, expand in fact, and that will help, of course, the quick commerce business, as it is already on a positive radar for many brokerages also. Talking about the set of stocks, Stellite Technology, there's a positive news. They've got an advancement in the cost and performance of their fiber optic sensor. They've embedded for AI intelligence solutions. Adani Enterprise, they have raised via QIP, they've raised their 4,200 crore segment of QIP, and now, of course, this will center their further growth plans. Issue was oversubscribed. If you talk about the participation from international as well as the domestic investors, there was oversubscribed 4.2 times. That's what the subscription figures came in, and there could be a big blow to Manappuram Finance. What Varun just explained us, that's because of the RBI action against the four of the NBFCs, and one of the NBFC is a subsidiary of Manappuram Finance, and that contributes majorly to Manappuram Finance revenue. 21% consolidated profit of Manappuram comes from Asirvad, so this could be a major blow to Manappuram Finance today. So his list, host of stocks that could be buzzing in trade today.
Well, absolutely, and let's keep it going with the list of stocks that are likely to be buzzing, and let's look at the ones that are likely to be, that are on brokerage radar in fact, and are likely to be buzzing. So when you take a look at Havells first, you do have Goldman Sachs, Investec and Jefferies that have come out with notes. Now, you do have Goldman Sachs that has hiked the target price, and Investec and Jefferies, like you can see on your screens, that have slashed the target price as well. Firstly, let's take a look at what Goldman Sachs then had to say in terms of the earnings. They're talking about how the growth is up, margins are something that they've seen lagging largely. In fact, they're also saying that the weak EBIT margins are also hinting at increased competition. So that is something that Goldman Sachs has highlighted. When it comes to Havells as well, they're also talking about how earnings should inflect and stock will be outperforming peers. So they have a bullish stance coming in, and based on that, they've of course hiked the target price as well. But when you take a look at what Investec then had to say, they're highlighting the margin miss, they're highlighting how they're lowering the margin expectations as well for financial year 25 to 27. So that is something that they're penciling in at this point. And they also expect to see a 3 to 5% cut when it comes to their EPS estimates as well. So that is the view coming in from Investec as well. But when you take a look at what Jefferies then had to say, of course, they've also slashed the target price like I mentioned, and they're talking about how the margin miss is something that is offsetting healthy sales growth. That is something that they've highlighted, and in terms of the festive offtake, that is something that they're seeing starting on a good note at this point. And they're talking about how sales were led by ECD as well as Lloyd in terms of the segments. Margins in many segments, though, they've said that they have declined, and that is something that they're highlighting. Now, in terms of their estimates for financial year 25 to 27 EPS, they've cut those estimates by 4 to 5%. So that's largely the word coming in from Jefferies. Moving on, let's also take a look at what Investec then had to say about LTI Mindtree, because they're maintaining a sell rating On the other hand, they're also hiking the target price to 5,600 from the previous one that was 5,370. They're talking about how this was an inline quarter, but they do expect a weaker second half of the year. Broad-based revenue growth across verticals is also something that they're highlighting, and they're also talking about how the commentary at this point is highlighting weaker revenue growth in the second part of the year, and that is something that you do have LTI Mindtree in focus for based on that Investec note. Lastly, let's take a look at United Spirits, because Macquarie has also come out with a note for that one. They're maintaining an underperform rating, target price of 1,100 rupees. And they're also talking about how Pernod India indicates outpacing industry at this point. They're talking about specifically for Pernod India, they are talking about how they saw 2% sales growth in the second quarter. That is something they're highlighting. And in terms of the sales growth for Pernod, they're expecting it to fully reverse in the next quarter. They're also expecting a strong growth for the fiscal year, and that is the word coming in from Macquarie when it comes to United Spirits.
All right, there could be a, looks like Havells is in for a good hit today, because you know the kind of EPS cut what brokerages have given, 3 to 5% cut in EPS estimates. This could weigh on the stock price today. But then let's get you some view from the market experts. In fact, we'll get you view from Sanjay Mukim, who's the head of India Equity Research for JP Morgan. He talks about his views on sectors and what to play amid this volatility. Let's listen in.
But it doesn't look like there has been a significant pickup. The one sort of hesitance we have in overly relying on that metric is there has been a significant inflation in the pricing of entry-level cars. Right? So, and all of us are familiar, you know, the first car that you buy was priced at X, now it's priced almost 3X because of steel price inflation, the regulatory changes that have been seen. So the momentum in PV sales has been missing because of the absence of the first-time buyer. So there is also a specific issue in the industry, to my mind. And as incomes rise and the inflation in car prices becomes palatable, I hope to see this dynamic improve.
Let's discuss the word capex extensively, first with private sector capex and the government sector capex. I'll start with the government sector capex. The data is out in the open that the government is lacking their capex or the expenditure targets. Do you think they could come back in the second half of this year? And if they do, what it means for the markets?
Yes. Mathematically, the government has 11.1 trillion, central government, let's say, has 11.11 trillion capex target for the full year, Nikuj. They are on run rate way behind in the data released until August is behind run rate. There is little reason to believe that the government will have to cut back on that 11.1 trillion rupees target.
All right, then that's the word coming in from Sanjay Mukim. Let's get you some news and updates coming in from outside the world of stocks. Then Bangladesh's International Crimes Tribunal has issued arrest warrants against former PM Sheikh Hasina and 45 others, including top Awami League leaders, in connection with alleged crimes against humanity during the recent mass student movement. Over 230 people were killed in Bangladesh in the incidents of violence that erupted across the country following the fall of the Hasina government. Moving on, then, at least 3 people died and 4 others were injured after a bridge collapse in the southern U.S. state of Mississippi. It is to be noted that the bridge in Simpson County was in the process of being demolished at the time, and it had been closed to traffic since September 18 as part of a bridge replacement project.
Right, and coming back to India, at least 25 people have died in Bihar's Saran and Siwan districts after consuming spurious liquor, with the death toll in the Hooch tragedy likely to rise. Meanwhile, preliminary investigations revealed that methyl alcohol was mixed with industrial spirit, the consumption of which caused the incident. And despite a slight reprieve from the summer heat as October begins, Delhi's air quality continues to deteriorate, posing serious health risk for residents. For the past 4 days, the AQI level across the capital has consistently ranged between 250 and 300, falling into the poor category.
Alright, then with that, we're completely out of time on this edition of Market Cafe on ET Now. From me, Shriyansi Singh, Priyanka Appul, as well as the entire team that put this show together. Thank you so much for tuning in. We'll see you next week for Market Cafe, but you don't go anywhere because the market takes all of the action forward.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.